Hey everyone, hope you guys are doing great on this beautiful Friday in Victoria. Today I'm very grateful to have Kam Brar with Auxilium Mortgage join us and give us a brief about what's happening in the mortgage industry right now and everything you need to know about mortgages. Welcome, Kam.
Oh, yeah, thanks, Des. Certainly nice to be here with you. And yeah, we're happy to assist and answer those questions for folks out there.
Okay, well, I'm glad that you were able to join us today. So, just some questions I have for you today. Tell us a bit about how things have changed for you guys during COVID-19 and this pandemic that none of us were really expecting to be in, but we are here today. And tell us how life has changed for you guys.
Well, we're doing a lot more of what we're doing right now is this on-screen world. We're doing stuff virtually now.
Mm-hmm.
We've set up, we were already in the throes of getting a secure document process for our clients, which got expedited. So we're doing that.
Mm-hmm.
We're doing virtual meetings with our clients online, doing that screen sharing, those pre-approvals.
Mm-hmm.
And we're set up for digital signing as well. So really, we've made the whole process without even having to meet in person anymore. So that's been a change. Adapting to running an office a different way. We're one of the offices that's still open. We've got half our team out of the office, half's working from home. So that solves some of those logistic problems and basically just getting used to lenders taking a lot longer to respond on files. That's one of the things we've definitely noticed because there is a lot of financial institutions operating with skeleton crews. It does take a while to seem to get responses back these days.
Okay, well, yeah, that makes a lot of sense. And I know that banks are just being more thorough from what I'm hearing from you and my colleagues in the industry, that they're just being a little bit more thorough and checking everything twice, it seems like, before giving that answer.
Yeah, they're definitely doing that. I think a part of it is because there's job calls involved and employment confirmation calls,
Mm-hmm.
and it's hard to pin down the people who've actually, let's say, signed the letter or whatever on behalf of the client. Those are the things that seem to be dragging things out longer. Appraisals are being done a different way. If you're a high ratio file, in other words, you have a less than 20% down, typically an appraisal is not required. There's an automated system for that. However, if you have more than 20% down and the the lender requires an appraisal, they've adapted. A lot of the appraisers are not going into the houses anymore. They're going on the outside, and the clients are taking pictures and videos or basically live streaming with the appraiser while the appraiser's outside the house. So we've all had to adapt in different ways, which is obviously changing how quickly things happen now.
Yeah, I'm sure that's impacting, and that actually takes longer for the whole
Yeah,
process
yeah,
involving.
it does slow it down a little.
It definitely does. Definitely does. So tell us, I've been getting a lot of calls about various situations, but
Mhm.
first tell us a bit about what you do. I wanted to let my followers and clients know about how you're doing A lending, B lending, as well as private lending.
Sure. Yeah. Well, like I said, I've been a mortgage broker since 2008. We opened our own firm in 2011 in the fall. Since that time, we've done over 500 million in mortgages and over 1,400 plus transactions. So in the mortgage world, that's a reasonable amount. We've got 6 staff here that assist with all of our lending and all of our things that we do for our clients. Essentially, we do the A lending, which is, of course, the AAA credit lending. As you can see on our website, if you happen to be on there, you see that lovely lady in the left corner. That's Rachel. She basically communicates with our clients online if they've got questions right there. And that's another way we like to assist and kind of be on top of things. Basically, we do, like I said, the A lending, the B lending. Those are for clients who have, let's say, some credit issues.
Mm-hmm.
And then we've got the alternative channel, private lending, for clients who might be needing a short-term solution of some sort, and they just can't seem to fit the regular lending model. So we've got all of that covered.
Mm-hmm. Well, that's great to know that you do have the different options, and some scenarios where one would use these options. Could you shed some?
Sure. Yeah. Let's say, for example, A lending is pretty straightforward. You've got great credit, everything fits the bill. All those different things are definitely in the landscape. But B lending could be, let's say you're self-employed and you're a plumber, you're a carpenter, a framer. You could be that, or you could even be a hairstylist. You could be a multitude of things. And what you're doing is you're getting, so let's say, some cash business. You're not showing as much income. You're doing what a lot of business owners do, which is writing off a lot of costs and expenses, but it's making your net income very low. And unfortunately, in the world we're living in today, lenders really want to see income. Income is vital to them. So in those situations, you might need an alternative lender. Like some of our lenders will use bank statements for lending. We can take clients and just work with their bank deposits and use that. So we can use that gross income they're taking in. We've even got some lenders that will give us a percentage of that income on top for cash, so those types of things. Or we might even have a client, let's say, due to maybe no fault of their own, they went through a bankruptcy or they had a divorce, which really just killed their credit. In those situations, we've got lenders, again, as long as you've got some equity, we can find a lending solution for you in that scenario as well. Mm-hmm. And the private one is, you may be a builder looking to build a house. It's a spec house, let's say, one that you're planning on flipping. But again, you show very little income. However, you've got a reasonably large amount to put down towards that. We can arrange that sort of financing. Or you might even be looking to buy a house to fix and flip really quick. It could be a variety of things that may be leading you to have to take one of those solutions. But we've got that one covered as well.
Well, that's good to know. And that you've got all the options there. And you're basically dealing with various institutions and lenders then.
Yeah, we've got over 40 different lenders. And I also am a partner where I manage a private fund as well. So we've got that in-house money as well. So if we need one for a deal really quick, we can make that decision. And sometimes in as little as a day and decide on whether we're going to fund it or not.
Okay. That's great. I mean, and that's why I think that people should get in touch with you if they have any questions in regards to that. And especially with the changes happening right now. And I know that there's been some situations where people have confirmed or they've gone unconditional. And now I heard initially banks had said if you'd even gone unconditional that they're going to check the employment again. But then I heard something this week where it may be that those deals will go through now.
No, what they're doing is if a deal was written prior to March 25th, mm-hmm. and it was a CMHC insured file or was even a traditional file where the lender had signed off on the income and everything and committed to everything, they will fund those and honor those. Mm-hmm. However, if your income wasn't signed off and let's say all you did was submit a file but nothing had been processed or reviewed, yes, then in that position, it won't, they'll definitely make you go through the hoops. And anything submitted after that is requiring full reviews. And what a lot of the lenders are starting to do is they're requiring you to have updated pay stubs, a week prior to closing. So prior to you closing that deal, they want to see your pay stubs again to make sure you're still working. Not all the lenders have adopted that policy, but some have. So really for us, it's just a question of, where really being selective on who we're going to place you with, depending on the type of deal you've got, how much of a down payment, what kind of a job do you have. For example, if you're with the provincial government, chances are, even if you're working from home or you've got to reduce your pretty good chances you're going to go back versus, let's say you're working for some really small firm, let's say you're doing nails or something at a private salon. Well, no guarantees what's going to happen there. So lenders are using income case by case and really looking at it.
Mm-hmm. Mm-hmm. And tell us about credit score a bit.
Yeah, well, credit scores haven't changed. The requirements are no different than they were before. Typically, if you want the best mortgage solutions, you're going to want a credit score of at least 680. And if it's below 680, it's not like you're going to get horrible solutions, but you get what's called restrictive GDS TDS, so ratios, which reduces your buying power. So rule of thumb always is you want the best credit possible. However, with our 3 different channels of lending, we've even done lending for people with a 500 credit score. So, again, if you want the very best solutions, best credit, if you've got less than perfect credit, we can still assist.
Okay, well, that's great. That'll be helpful for anyone that wants to know, and at all different levels. If, like you had mentioned, like just going through a divorce or something unexpected life event and that affected your credit score and something out of your control, then it just can make a difference and someone can come to you and you may have solutions for them.
Yeah, well, we can. I mean, there's programs for that if you're trying to buy out your partner, your spouse. There's a myriad of ways we can look at things. It'll just really, with anything else, I always tell people is that before you start drowning, reach out for a lifeline. Like a lot of people, they wait, and by then it's too late. If
Mm-hmm.
you're starting, if you own a house or you've got debt or something and you're splitting up and you're starting to have, problems are starting to develop, the key is that communication with your lenders to really mitigate the damage that could happen to your credit. Because really, we are in a society where credit means a lot. I mean, it's weighed very heavily.
Mm-hmm. And let's say in the scenario where you have your first mortgage
Yeah.
and you want to do some renovations, or you need some extra cash for
Hmm.
whatever it may be,
Hmm.
and you want to go for a second mortgage and you got that initially from a different institution and hadn't
Hmm.
come through you, can they still deal with you with that?
Well, the challenge isn't so much with us. Some lenders don't do second mortgages, so your existing lender may not offer such a product. So in that circumstance, you're going to have to look at perhaps switching everything over to somebody different. Some lenders will allow you to put a credit line behind an existing first mortgage. Again, it's really case by case, and some lenders don't even allow a second behind them. So it's really important to talk to whatever institution maybe you originally got it with, find out what their policy is, reach out to a professional like one of us, and we can give you kind of some guidance and direction with depending on what your situation is. Sometimes it makes sense to pay out that first mortgage because maybe the terms and the rates aren't going to be as good, or maybe the cost of the second one is going to negate any savings you would have of not paying it out. So again, really important to review what you've got. And our job here really as a team is we will look at all your options. If our focus is not going to be to do what's best for us, but what's best for you, and we'll lay out your costs in a myriad of ways.
So B lending or private lending, could they do a second mortgage as well?
Private lenders can be lenders. There is a type of product they have, but only a very limited amount of lenders do that.
Okay.
Yeah.
Good to know. And tell us a bit about interest rates right now. So the Bank of
Well,
Canada.
yeah, they're all over the map these days, I find. As you can see, like we've got a rate as low as 249. We got variables that are 245, 225, so it really, rates are not like the old days. When I first got into this business, it was kind of a one size fits all.
Mm-hmm.
Now what we're dealing with is sometimes the lender that has the best rate may not be the right lender for you. For example, that lender may not take Canada Child Benefit, or they might treat spousal support a different way. It could be that you're paying spousal support and maybe they treat it as they will use that liability differently than another lender will. Or maybe you're buying a house with a suite, but the lender that's the most generous with rental use may not have the best rate. So really what I tell people to focus on is the best solution overall. While our goal is always going to be to get you the best rate, if you are just looking at rate alone, and let's say the lender that offers the right fit for you and gets you into the right property is $20, $30 a month more, what does it really matter if it allows you to achieve what you're trying to do?
Mm-hmm. So tell us a bit about, I've been getting a lot of questions and clients will ask me, and I'll say I'm not the expert, but variable versus fixed.
Yeah, so variable mortgages are certainly if you had a variable mortgage you took out a couple of years ago, you're laughing today because the Bank of Canada prime rate has dropped so much. And the discounts on variables sometimes were at, 0.5% to 1% off the prime rate. So for example, prime rate right now is 2.45. If you have a variable that's -1, you're paying 1.45%. That's insanely low. What's happened with variables is the biggest advantage I see with variables typically is the fact that if you pay them out early, normally with a standard variable, you're only going to get hit with 3 months interest to break that mortgage versus a fixed mortgage, which can have either 3 months interest or what's called IRD, which is interest rate differential. You probably, if you go online, you'll hear some horror stories about some penalties people had to pay to break one of the mortgages at one of the big banks. And the reason for that is they work off discounted to posted. It's a little more complicated, but it can lend to itself to a fairly large penalty if you're not able to port the mortgage to another property. In the case of, let's say you're splitting up, you as a couple have to sell the house and you have no other choice. It can hit you with a pretty high penalty. So your penalty typically with the variable is always the lowest. So that's always the best way to go.
Okay, yeah. Well, it has been for the last few decades, definitely. I've noticed that.
Yeah, you know what? In the last a year and a half ago, it wasn't the variable was, it's kind of, it really depends on what's happening. This COVID-19, nobody saw it coming.
Mhm.
And if this hadn't occurred, the fixed rates were sensationally great. I mean, the variables were costing way more. So people weren't taking variables at all because the clients who like the fixed like the idea of not having to worry about rates in the future.
Mhm.
Like if you can get a 2.49 for 5 years, hey, you're pretty much off to the races. So why would you take a risk with that?
Definitely.
Yeah.
That's true as well. The other thing, I see that you've got all these various lenders that you can probably see off your website on the screen.
Yeah.
So tell me, like, amortization for all these lenders, is it the same, or does that?
No, if you're taking an insured mortgage, CMHC, under 20% down, it's always 25 years maximum. Doesn't matter which lender you go to. When you have more than 20% down, typically most lenders are a 30-year amortization. On the alternative side, like the private side, we've got lenders that'll do interest only, and some that can do, 35, 40, even 50-year amortizations.
50.
But those are going to be on the private side. So, they're a lot different than the traditional model.
Okay.
Yeah.
Well, it's good to know that you can keep your payments lower then,
Yeah.
depending on what's going on. So the other question I had for you, any advice you can give to first-time home buyers?
You know what, if you're a first-time home buyer, we've got a section on our website geared to them. They can download a first-time home buyers guide that we wrote that's specifically geared to first-time home buyers. There's lots of information that covers all the facets of kind of making that first purchase for people. The best thing I can tell people is, do your due diligence. Really, what a lot of people don't do, and it's really important, is I call it test driving your budget. And so if you're thinking of in terms of a mortgage payment, once you've got an idea of what you could be approved for, to try that out for a while, make that size of a payment on a regular basis. So as an example, let's say you're making $1,500 a month in rent, but a mortgage payment is going to be $2,500. What my advice to you would be, for 3 to 6 months, run with a $2,500 a month payment and pretend as if you were paying $2,500 a month. And if you can do that for that time period, you know what? You've at least proven to yourself that this is something you can handle. A lot of times people take this huge jump up and they don't realize all the other costs that homeownership comes with. So really, to just do that legwork.
I've had some clients reach out to me about just buying pre-builts. So
yeah,
just securing something that's going to be built in the near future or a year down the road. Do you guys help with that as well?
Brokers typically can't. It's usually if you're looking at a development, the lender who did the financing for the project is usually one who can offer those longer holds and stuff. And again, they are subject to change. So even though you have been approved, there are times they will revisit your file. So if suddenly you went bankrupt in between the time you did the kind of the purchase and a year and a half or 2 years down the road, you're now bankrupt or something's dramatically changed, that's going to have an impact too. So even though you've been pre-approved, is not a guarantee that the lender will close on that mortgage 2 years from now.
True. That is, we're seeing some changes right now, especially if your job, like the hours get reduced. Like I've had some clients that have been in different industries, and just because of the shortage right now, even though they're essential workers, they're getting less work.
Yeah. Well, the other thing you'll notice is if the market adjusts. So what happens is, if the market drops, we had an example of this where there was some folks we were dealing with. They had a pre-build they bought, and the pre-build to today's value dropped $60,000. So they had to come up with that additional $60,000 on their own because the lender would not finance that.
Yeah, so you just have to be very careful.
Yeah, you do. Yeah, always a good idea to really think about it. I mean, my advice to people, ideally, if you can, is try to buy something in your immediate window, because then that at least you've locked everything in. There's very few variables that could derail you.
So if you are going for a pre-build, maybe something that closes a little bit sooner, going down a year could be.
Yeah,
Oh,
Well,
well.
that and have a plan B. If something goes wrong, what's your backup plan? You know, if this is, you've gone on a limb to do everything, you just got to really be sure that it's still going to work.
So some people that come for a pre-approval, banks will do 120, 90 days. What's with you guys? What is the
Yes. So what's happening is there's a big difference. A lot of banks will do what's called rate hold. That's all they essentially do.
Mhm.
And pre-approvals can vary from anything from a couple of questions to a full-blown application. We typically will only do full-blown applications.
Mhm.
For us, it makes a lot of sense because we know that once we've done that, we know with confidence we can send you out there to shop or refinance or do whatever it is you want to do.
Mhm.
And once we've done your hard pre-approval, typically they don't expire really. It's not the rate that we're holding. It's we are the terms and how you're going to be approved is what we've talked about and what we've set you out on. Rates may fluctuate a bit. Sometimes I have clients who come back a year later, provided their credit hasn't gone or changed or their income hasn't changed. That pre-approval of what we told them is still good.
Oh, really? Well, that's great.
Yeah. I mean, of course, the rate can fluctuate. No lender is going to hold your rate for a year.
Mhm.
But the key is at least then you know the fundamental terms are all the same.
And there was something I heard recently about, which I know has been around for a while, but it's I guess more important in today's world is that if there's a rate adjustment for between that time, they usually take the better of the. Is there something like that? Ever?
Yeah, so what lenders do is they'll offer you rate drops. They all vary. Some lenders will do one rate drop, some will do multiple rate drops. So what will happen is what we do here is 2 weeks prior to your closing, we will review the rate that is out there now versus what you originally got. If the rate is lower, we'll request that rate drop for you.
Mhm.
If the rate has gone up, well, you're protected. You still get that lower rate. Sometimes we have lenders that allow multiple drops. So we'll kind of, every time we see a drop, we'll request it. So we're always locking in for the lowest one. But you have to bear in mind that not every lender offers that. And the other thing to realize is that they all need time to facilitate this. Sometimes clients are sitting in a lawyer's office and some lawyers have said, oh, you know, maybe you could get a lower rate, call your lender today. However, your filer is funding tomorrow, your purchase is closing tomorrow. In today's COVID-19, nobody's reducing your rate the day before. It's just not happening. They're already short staffed. So just because we've got that team again, it's not just me as a single broker. We've got somebody watching that on a constant basis for our clients.
Well, that's nice to know that you guys provide that extra service.
Yeah,
Yeah.
yeah.
Yeah. And then now that this obviously COVID-19, you mentioned that again, and a lot of people have been hit, or they're homeschooling, or their children, or they're having to work from home, and their hours have drastically changed, or they've been laid off. So now, with the some people have wanted to take advantage of the mortgage deferrals. So could
Mhm.
you shed some light on how that actually works?
Yeah, so what you have to do with a deferral is contact your individual lender. They are the ones who will talk to you about it. They'll assess your situation and see if you qualify for a deferral and what the terms of that would look like. The biggest misconception out there is that I've heard from people is they somehow think those are payments they never have to pay back. That I wish that were the case, but it doesn't work that way. Those payments will simply be tacked on to the principal balance. So you will still be making those payments. And essentially that outstanding principal that you've got tacked on, obviously you're going to be paying interest on it still too. So it's not like you're getting a free holiday. And let's face it, I mean, at the end of the day, if we started basically forgiving everybody's payments, our financial system would essentially collapse and it wouldn't do us much good.
Yeah, well, that's good. Good advice.
But lenders are working with borrowers. So I haven't had anybody give me a horror story saying, oh, their lender was unreasonable. Everybody gets it. And the other thing to bear in mind, these deferrals are not impacting your credit. So the lender's not reporting it as a late payment or anything. The key caveat with that, though, is if you've made arrangements with your lender, let's say to defer one or two, and suddenly you plan on deferring 3, 4, or 5, that will affect your credit. So whatever arrangements you've made with your lender are the ones that you have to work with. And of course, if there's another change that needs to happen, contact your lender. But if you do not communicate with them and you go outside those bounds, there will be potentially risk of that being reported to your credit bureau.
So you have to actually call them. They're not going to just pick up every file and defer it. No,
Well, you can
right?
imagine how hard that'd be for them, Des. So if
Yeah.
it's something you want, because don't forget, the lender's not motivated to defer your payments. They don't want to.
Mm-hmm.
So if it's something you want, we're back to consumer ownership. We're responsible for our decisions, and we were the ones who got to take action.
Mm-hmm. True, true. That's great. Any other advice you can give anyone right now that's thinking of buying or selling or wanting to make a move, that what they can do?
I guess my number one advice is don't do anything out of fear.
Mhm.
Don't let fear either hold you back or force you to sell. You got to just kind of, this will pass. Things have come, things have gone before. This isn't the last thing we'll ever be hit with. And I think a lot of people panic, and and I guess my best advice would be stop listening to the media. There's so much news out there to just, people get so uptight, so agitated, and now you've got instant access to it. So, disconnect, take a look at your personal financial situation, value what your goals are. If it's being home ownership and that's really what you want to commit to, great time to get pre-approved, because as soon as things start loosening up more and more, you'll be ready to go. You've got a solution. If you're thinking of selling, again, a great time to talk to realtors, because you know what, they've got time. They'd be happy to talk to you, take a look at your property virtually or however. They've got time to do that research. But the key is, I think if you're prepared one way or the other, when things kind of settle out, you're one of the first people out of the gate, you'll probably benefit from that.
And depending on your circumstances, like if there's some reason that you must move right now
Yeah.
during this, I'm still an essential worker, and there are ways that we can make it work for you, and there are sales happening right now.
Oh,
We're not
yeah.
encouraging people to go out and buy or sell right now, but if it's a life event or there's some circumstances that you do need to, it is still available for you.
Absolutely. Yeah.
But taking the right protocols, which we are taking. We have some
Yeah.
COVID-19 protocols here
Yeah.
in our office as well. But the other thing I wanted to just let everyone know about was that, this is a challenging time for many of us, but when it comes to the market, Victoria is not so volatile like other
No, you're right.
markets.
Yeah.
We have a diverse economy. We're very fortunate. The one thing, definitely, the one industry here, the hospitality industry, has never been hit like this. I mean,
Yeah.
in my lifetime.
No, no.
So it's definitely a big hit and unexpected for those individuals,
Yeah.
and I do feel it. And we're all in this together, and we will get through it,
Mhm.
and we will move
Mhm.
forward in a positive way.
Yeah, no,
So,
you're absolutely right, Des. I mean, it's definitely taken its toll. But like you were saying, Victoria is a pretty level economy. It doesn't go crazy up or down.
mhm,
And I was reading a stat, and maybe you can correct me, that I think it was 44 or 45% of the properties sold either sold at ask or above ask in the last 30 days.
yeah,
So that's telling you that the market is still active and there's people looking. So the key you want, and I've heard of multiple offers, that there's still
yeah,
multiple offers happening.
there
So
are.
the key with it is if you're in that situation facing a multiple offer, you better make sure that you're locked and loaded. You've done all your legwork. You've gotten a hard pre-approval, and that when that realtor, like somebody like Des, is writing up that offer for you, you're going in there with your best foot forward. I think it's really important at a time like this.
Yeah, we do have some clauses we're putting in for COVID-19 right now to protect our clients as much as we can. But
Yeah.
another thing that's really good for you guys for everyone to know is that this is a time where uh, we can give you that, individual attention to get you all the knowledge that you need right now to gear you
Hmm.
up, to get into the market whenever you feel like you're ready to
Yeah.
take that move. And definitely, there's been quite a bit of different changes in the last little bit, but it's not something we can't coexist and go through, and
Hmm.
stay positive at the moment.
Exactly.
Hmm.
Exactly.
Hmm.
Yeah. Wise words, Des.
Yeah, no, thank you. And thank you for your advice today, Cam. Anything else
No
you
problem.
include?
Well, I guess the other thing is, for any of your clients that may speak Punjabi or Hindi,
Oh, yes.
that's something that I'm fluent in, and
Mhm.
I can actually speak French. It's been 5 years I studied it, but I'm not as amazing as I once was, but I can still converse enough to get by. So
Oh,
we got a little extra assistance there.
So you got French and Punjabi and Hindi. And, you know, I want to mention that you have a wonderful team because every time I've had to reach out, they're very good. Even on a Sunday, I feel bad. I'll be like, some client will call me and they really are
Yeah,
eager to get pre-approved. I'm like, okay, call them. And and
yeah,
somebody always talks to them even on a Sunday. And
yeah.
it's really nice that you guys are there to give your full on attention and be there for your clients to serve them.
Yeah, well, that's our goal. That's why we're in the service industry. The two of us, that's what you and I do.
Yeah,
Yeah.
definitely, definitely. All right. Well, thank you, Cam, for
Well,
being
thank
with us
you.
today. You're very
Yep,
welcome. And stay safe. And
will do.
everyone watching, stay safe out there and reach out to Kam Brar and his team if you have any questions. Okay.
Take care, folks.
Okay. Take care.